All right. We are live. We are back with another market open. Let me share this out into the world. And we will begin. Live market open. Here we go. It is again time. So it's been a while. Well, it's been a day. That's all it's been. It's been a day. But we are back. Welcome back to the East Side Quarantine Quartet. Thank you, Uriel, Cameron, Bacon Bombs, Hines. I'm going to talk about the news in a second. Jason, what's up? Back, baby. Back in New Jersey. Just got back from Vegas 2 hours ago. We took a red eye. So I got to Vegas. I got to Jersey at around 6:45 a.m. I'm in my apartment right now, and I'm so happy to be back. I am so honestly, man. Vegas was cool, but New Jersey is home. New Jersey is home. New Jersey is the best place on the planet. I'm sorry. Yeah, after you come back from Vegas, you're like, is this really that good of a place? It's like there's something different about the East Coast, man. There's something different about the East Coast. All right. We're going to get into the market. Joel, what's up? Tune, what's up? Valentine, what's up? We are going to start talking about what's happening in the market. Jason, Javier, what's up? XJ still taunting us with that unavailable Aldea hoodie. Aldea hoodies will be available soon. We're going to get them very soon. Is Gabe going to jump out of that door? No, he's still in Vegas, actually. He's still in Vegas. So a lot of breaking news right now. The first thing I want to talk about for those that are here is the Palantir news. I want to share my screen real quick, and then we'll get into some of the other stuff. And I'll talk more about Vegas later and probably a little bit later on Late Night Stock Talk. So Palantir extends controversial defense contract that Google abandoned. This is the headline coming from Bloomberg. Incredibly interesting. Let's read through it. Palantir Technologies re-upped and expanded more contracts with the U.S. government that have been controversial with Silicon Valley. The Defense Department awarded the data analysis software company a broader deal to develop and deliver artificial intelligence and machine learning capabilities for the special forces, the joint staff, and all branches of the U.S. armed services. $229 million for 1 year, which is insane. I mean, $220 million. Palantir, I think, was up. It's past $8 right now. Where is it at? It is $8.05. So the market generally is going down. Pre-market. Palantir is up on this news. Now, is that going to explode the stock? Probably not. But hell of a contract. Now, this is a contract that Google objected to developing back in 2018 when a lot of employees in the company basically said, hey, this is unethical. Why is it unethical? Because the software, let me see right here. Yes, the software is you're going to use AI and machine learning to improve existing video recognition of software and analysis to increase the accuracy of actions like drone strikes. So a lot of the employees in Google were like, well, we don't want to be working on something that's going to create drone strikes. So we're not going to do it. And I mean, there's a lot of different thoughts and a lot of different opinions here. But, you know, I think this, again, points to Palantir's argument about Western democracies and Western freedoms, and everyone wants to help China and dictatorial regimes, but no one wants to help actual, democracies. And so Palantir stepped in, and they took up this contract. Obviously, they just got a $95 million contract over a 5-year period with ICE. This is another huge military contract, $229 million for 1 year. I mean, goodness. Talk about a meaty cut. It's not over 5 years. That is 1 year. And they recently extended a $43 million contract with the Army Forces. I'll pull up that article later, but that was yesterday's news. Big Bear AI, which works as like in joint combination with Palantir. They've done joint partnerships before. Got a $14.8 million contract today from the U.S. Army Forces as well for AI and machine learning. So, I mean, this is when they said the government revenue was going to roll in. If we can get a couple of more of these before the end of the year, that's a lot of revenue they're going to put up on these quarters. And I don't think it's going to bust the stock wide open unless there's a macro rally, but it's not going to hurt the stock. Let's just say that it's not going to hurt the long-term potential of the company as well for them to be able to do what they're doing. So really amazing news for Palantir. I'll make another video later analyzing it more in depth. This was kind of just like the basic rundown for 2 minutes. Let's look into the markets. S&P 366 down 1%. So first of all, yesterday, I know I did not do the market open. I hated myself for it because I haven't missed for like 3 weeks. So that was the day I missed, but I could not wake up. Like I actually could not wake up. It was getting to the point where I was like, if I wake up and do this, I'm not even going to be able to like talk about the market. So I had to take yesterday off, but the day I take off, of course, the market rallies. So maybe I should take days off more to give everyone a green day because the market did phenomenal yesterday. Apple was so interesting. Apple is 7.3% of the S&P, and they did not rally. In fact, they're down another 2% pre-market. They were down 1.27% yesterday. If Apple had rallied with the market, we would have got a epic run yesterday, and it would have been amazing. Isn't that really 1 year though? It's not 46 million per year for the last year. Are you talking about the $43 million contract? Because the 229, I think, is the new one. You might be right about the old other one, though, but I have to read the article. Palantir's getting contracts left and right, baby. Let's go. Absolutely. Rocket Lab, I have to do a DD on this. A lot of you guys have been commenting, hey, check out a Rocket Lab. I will go deeper into it. I have no idea what they do, to be honest, so I have to go deeper into it. Kathy Woods crashes the market amidst makes a rise. If that's the case, now shut down the stream. Oh, man. If it's really me, maybe I can't ever stream again. Okay, so DNA, Ginkgo Bioworks, stock I've been talking about a little bit, was up 20% yesterday. I put a trailing stop loss for about 20 shares. I have 1,622 shares, so less than 1/50th or whatever of the shares I have, just to learn how to do a trailing stop loss. I also did a cash secured put yesterday on DNA. Only one contract, so like I got $25 in premium. I'm going to explain a lot more of this in a future video, but I finally learned how to do a cash secured put, and it's honestly amazing. You get paid premium to own shares of a company you're long, and if the price gets to the strike price that you bought your put at, you just buy your shares because you want the company anyway, and you reduce your premium. So I'll be talking a little bit more on that. Obviously, Gabe helped me understand that more, so it's super, super awesome stuff. I bought 9 shares. Join me, Amit. I got to know what Rocket Labs does before I do that. Good morning, Amit. Good morning, Aaron C. So the thing about Ginkgo is let me be very clear. I don't expect this run to last. They were up 20%. So out of all the stocks I saw yesterday, Ginkgo was up the most. I don't think I saw another stock that was up 20% yesterday. Correct me if I'm wrong. I don't think this 20% is lasting. I think we're going back down to 294. It's just a question of when, and it's a question of if this rally holds up. But I have no expectation for Ginkgo to stay up 20%. But it was cool to see how fast it runs. And how much investors are ready to buy as they see it run. Because out of the entire day, I mean, I don't know what other stock was up 20%. And I tried to look for them, but it was the stock that I owned, 16. And my only regret was I didn't buy more I had the money, but I was like, so that's what happens when you DCA. But we'll see what happens. It's because Amit bought puts on DNA. I wrote puts. I did not buy puts. Buying puts is bearish. Writing puts is bullish. A lot of biotech companies rallied yesterday. That may be something as well. Biotech was rallying. That's another potential. Okay, so Tristan, my videographer, barely slept on the red eye back to New Jersey. I don't know how he didn't sleep. I somehow fell asleep. I don't remember sleeping, but I woke up and we were landing. So he's sleeping right now. I have this bell. The market is opening in 26 seconds. Unfortunately, I hope I don't wake him up, but I've got to do this for you guys because we missed yesterday and we got to get the bell, and we didn't have the bell in Vegas. You still in Vegas, bro? Nope. Medina, I'm not in Vegas anymore. I'm in New Jersey. Just got back 2 hours ago. Very happily back in New Jersey. Vegas is cool, but New Jersey is the East Coast is everything to me. All right. The stock market on September 29th, 9:30 a.m. is open. I really hope he didn't wake up because he worked so hard this weekend, but you got to ring the bell, man. You got to ring the bell. All right, let's get into these stocks. Here we go. Palantir up 0.89%, breaking the $8 barrier. Not bad. ARC 39 down 2%. S&P down 1%. S&P hit new lows a couple of days ago. Then it rebounded. I am curious to see if it is able to hold this up. Bitcoin 19,298. It was up 5% like 3 days ago. Now it's back down. What else we got? Ginkgo down 4%. I expected that. 333. We'll see how that performs. Robinhood 98. Zoom 74. Roku 59 under 60. Opendoor was up decently. It's been it was close to being below $3. Now it's at 326, down 3.8%. Pre-market. Nvidia 124. Wow, down 125. Where is Apple? And Meta down 139, down 1.6. All right, looking like a red day, at least so far. Wow, Apple 145. There's so much analysis going on if Apple is fairly valued at all. I don't know. I don't know, because there was a report came out that said they're cutting production estimates for the iPhone 14 because of lack of demand. Now, historically, they always overestimate, so cutting is a headline, but it's not like necessarily bad news. But you got to think, and I've been saying this for a couple months now for those who are have kept up with the channel, I don't know how much more you innovate on this phone. And so, like, I don't know if that's the thing investors can bet on anymore when it comes to the phone. So I guess we're going to see what's the new contract. So we went over it before we opened the market, but it is Palantir. I'm actually going to put the link in the description for those who are just here. That is the new what do you call this? New contract that Palantir just got. It's only 8:30, guys. Texas time is doing that. Yo, getting up at 6:30 for the market open last on Tuesday was tough. That's why I couldn't do it on Wednesday. I was like, bro, I just can't get up in here. All right, Tesla 283. Tesla didn't run yesterday either. Tesla, we had a really good rally. It ended at 285. I mean, it ran a little bit. I think it got to a high of 289, but nothing that insane when it comes to Tesla. Google 98. Google was up about 100. It's now down below. You know, people want to see Google at 80. I don't know, man. I don't know if we keep getting little rallies like that, and instead of going further down, you know, every single day. I don't know if we see 80. It's kind of like if the crash happens, it might just happen all at once, like a 2008 type of thing, where it's just like flops and hits a low in 2009 and then finally recovers, which would happen in 2023. Or we have these little bear market, quote unquote, rallies. Stanley Druckenmiller yesterday said he and his firm are not always correct, but because they have to do this for a living, he quoted Uber, by the way, down 1.66%, that a hard landing is coming in 2023. The Fed has not tackled inflation correctly, and we are absolutely in for a recession. And then you got other people saying, no, this is the best time to buy tech. And it is so confusing. And, you know, Palantir up 2.8%, pretty phenomenal. 2.08%, not bad for Palantir. I'm trying to figure out who to listen to and whose analysis makes sense as a novice investor to try to understand anything. Any comment on Bank of England recommencing unlimited QE? So this is a great, I'm sorry I forgot to mention this. This is actually what I thought was the catalyst for rally. You know, some people were like, oh no, we were oversold yesterday. I was like, when I saw this news in the morning, and again, I know I didn't do a market open yesterday, but this was it. I mean, the Bank of England trying to save the central bank's trying to save England through unlimited QE is probably the reason why we rallied. It was probably that macro level catalyst. Now, was it the only reason? Probably not, but it was a big reason at the end of the day. And a lot of people probably saw that. A lot of people saw that as bullish for stocks. Now, is that going to last? Who knows? We got a red candle forming here on Palantir, and so we're going to see. Amit, did you eat some Tattoo Chef with Jeremy? I did not. We did not get a chance to buy Tattoo Chef, but Jeremy's house is big, bro. Like Jeremy's neighborhood is like, it's like, first of all, it's a gated community, so it's like a legit, you know, it's a nice place. And then you get in there, and there's just mountains and mountains and mountains of Nevada scenery. NASDAQ, by the way, under 11,175 for today. And it was really beautiful. I mean, first of all, the guy let us into his home and, you know, let us sit in his couch. And it was a very nice thing to do. I mean, letting people into your home is a really big deal, you know? So it was pretty amazing for him to let us be there. And then we got to talk about a lot of stuff, and we had a great interview for about an hour. And I think you guys are going to enjoy it. AMC at $7, Neo at 16, down as well. Teladoc, wow, down 30. Teladoc is look at Teladoc on the RSI, 744. You talk about oversold. I mean, massively down from the 30 levels. DNA, Ginkgo Bioworks down 5.4% to 3.28. Makes a lot of sense, as I said. The run was fun to see yesterday, but none of these stocks I think are going to hold up any of their run. That's why I'm kind of just like, yo, if we got to rip the bandit off and get 360 on the S&P or the new lows 340, whatever, let's rip the bandit off and let's keep going. But we're going to see how that happens. Is he going to invest in DNA? No, I didn't talk to Jeremy about Ginkgo Bioworks. You should turn on after hours view on your Webull charts. That's true. I should probably turn that on because I never see it after hours. Okay, I will do that. I didn't talk to him about Ginkgo. We talked about Meta. We talked about Tattoo Chef. We talked about the general market. We talked about YouTube. We talked about a lot of stuff. We talked about living in Vegas for him, his life, all that stuff. So, yeah, we didn't talk about any other things like some of the stocks that I'm into. Do you think Palantir goes back to 7? Yeah, to be honest, like I don't think any of this stuff is real, to be honest. And I've been S&P 365 down from 367. I think I've been very consistent since May. If you look at the market opens when the market was down. Now I just kept saying it's probably going to go lower. Now in May we hit the bottom in June 30th and then we bounced up. But I've been very bearish in general because I don't think it's cool to be optimistic on something where everything's a mess. Like SoFi, by the way, 5.10. Quantitative tightening is just starting. Inflation is not the best. The Fed is going to be more hawkish. We can make up theories for why we would have a rally. Like, for example, one of my theories is that the midterm election every year after the midterm year, we return an average of 33% on the S&P. So if the S&P is down 20% this year and it ends at 20%, let's say at 365, then next year it's going to be up 10% because it'll be up 13% because 33 minus 15, which is what? 18% actually. So it'll get back to 480 and then go a little bit above that. So, I mean, we are going to see how it plays out, but I don't think there's any major reason to be bullish. Like the Kathy Wood argument about, deflation is coming. That's not a reason to be bullish. That shit was crazy hearing her say that. I'm like, that was kind of ridiculous. Interview will probably be out like Monday. It'll be audio only first, and then it'll be video right after. When is it moving to Vegas? Never. Literally never, bro. I have so many thoughts on Vegas. I will never move to Vegas. And we'll probably talk about it on late night stock talks, but it's not a great place to me. Was there a catalyst yesterday for DNA? No, there was no catalyst. There was literally nothing. I thought there was nothing. It was just a runner. And so when you get to a stock that is so heavily beaten up, when it runs, it's going to run. We're at or close to the bottom. Chris, but don't you think that housing stuff that's going to crash is going to even make this worse? Like, we know the housing crash is coming. There's no way 7% rates are 7% mortgage rates are sustainable. So don't you think there's more pain to come to some extent? Like, I don't know if this is the bottom. I mean, it doesn't feel like 3,600, which is barely hitting our old lows, is the bottom. Let me pull up a couple of videos that I want to check out on CNBC and some analysis here. Apple is so interesting, man. Apple is a very, very interesting stock. Let's look at Ken Griffin, the CEO of Citadel, talk about the Fed and what he thinks needs to go on.
I think that they have done enough to this point in time that they should stop and wait. It speaks to the when and the how much of another rate hike and if and when that happens. Have they done enough? Should they let it go through the system like some suggest they should?
So from my vantage point, absolutely not. Like, we should continue on the path that we're on to ensure that we re-anchor inflation expectations. There's a psychological component to inflation that we need to make sure that our country doesn't start to assume that we should expect 5 or 6 or 7% inflation, because once you expect it broadly enough, it becomes reality. It becomes the table stakes in wage negotiations, for example. So it's important that we don't let inflation expectations become unanchored. But I will tell you, I think that the Fed has another challenge, which is, if Stan Druckenmiller's right, let's just stipulate he is, and we go into a deep recession late next year, then we're going to have had millions of Americans unemployed back to back twice in a 3 and change year period. And from the perspective of our nation, the loss of human capital that implies is devastating. To be unemployed twice in such a short period of time, the diminution of job skills, career experience, derailment to future aspirations, a belief that the American dream is not achievable, those cultural and tangible impacts are really devastating. So for choice, if I am the Fed, I want to try to bring inflation expectations down, but I don't want to create a hard landing because of the cost in human capital.
Do you think that they can actually control that?
No, I think that's a really difficult dance they're trying to do right now. But you're dealing with very lagged effects. You raise rates today, it impacts very small sectors of the economy very sharply. The follow-on knock-on effects will take 6 to 12 months to play out. It's a really difficult job they have.
Stan, aside from suggesting that,
and when he says it hurts short-term parts, sectors of the economy short-term, he's talking about tech. And that's a big sector of the economy. It's probably the biggest. But long term, it'll be helpful to raise. So Griffin says we need to raise rates. I mean, that's his argument. Now he's saying it's a difficult job for the Fed, but he's saying we need to keep raising rates because 5 to 7% inflation. Let's say we get it down to that, and then we go to 50 bips. That is unacceptable. The Fed has said we want to get to 2%. If we want to get to 2%, we might have to do another, 275 bips before the end of the year. So I guess we're gonna see
that there was going to be a hard landing at some point next year. Suggested you could have something much worse than that. Do you think we could?
I mean, it's possible. It's always, I mean, here's the problem with economics. And, I spent 3 years of my life pulling my hair out at Harvard studying economics. There is no answer. There's just distributions. There's just what may happen. And of course, there's some distribution that says we're going to go into a significant recession or depression. Asset price, I can give you that story. I can give you that really bearish story. I'm not sure it serves much purpose. One should always think about that in terms of their portfolio allocation. Can I endure the losses in my portfolio that would go with a severe recession or depression? I should be aware of that possibility. But you want to think about managing your portfolio over your life and over your ability to sustain your risk positions over the journey of your life. In other words, you don't want to own so many equities that when the inevitable recession happens, you're forced to sell at the bottom. That's
basically saying have some cash. Make sure you have some cash because it might get a little rough. And that's contrary to what other people are saying, which is buy the freaking dip. So, oh man, it's complicated trying to figure out which one is the right way. Obviously, DCA is the best strategy, but Palantir takes a dump, 791. That contract meant nothing for the stock because the stock market does not care if Palantir gets all these governmental contracts. They don't give a shit. They literally look at it and they're like, how can we not give a shit in a much more funner way? Oh, here's how we don't give a shit. We'll rise it up and then we'll just jack it all the way down. Duolingo, this is a Christopher Patel stock at 95.19. Chris, are you buying into this stock, my guy? Are you buying into Rosetta Stone on steroids? Because if you are, I want to know that. QQQ 273. Oof. I know someone on Twitter that bought $1 million of this at 281. So it's down to 273. Tesla 278. I'm waiting for Tesla at 260, 269, and then I'll probably nibble in it. But it's got to go down. I have about $7,000 of buying power in my Robinhood, so I'm don't go on margin. Yes, I will never go on margin. I hope everyone knows. Just because I learned what a cash secured put is, and I know how to do it on Robinhood, and I know trailing stop losses now, I will never go on margin. That is the most, in my opinion, at my intellectual capacity for stocks and my financial situation, irresponsible thing I could do, especially with the macro being the way it is. Because remember that guy that freaking lost $700K on Robinhood because he used margin or whatever, and he offed himself, for lack of a better word. Yeah, you don't want to do that. So don't gotta be too greedy. You just gotta not do anything crazy. Next quarter, gonna start buying Duolingo. Chris, we got to do a deep dive. I haven't talked to Chris in like 2 weeks. We got to do a deep dive on Duolingo. I don't know what the hell you see in that company. Is it undervalued? Sure, because every stock is probably undervalued on the market if we're talking about 5 years. But Duolingo, interesting, man, interesting. Okay, what else? Snowflake falling below 170. Wow, 167. 167. Weejo. By the way, that event. Oh, some of you guys don't even know. Hold on, I got to show you some of this. I got to show you this. Okay, so at the Weejo event, which I have a vlog coming on in a little bit, probably next week, I got to witness their newest AV. They 3D printed a prototype autonomous vehicle, and they're building out a data platform for AVs. It's really, really awesome and cool. It was super nice that they invited me to check it out. I didn't really know what the event was, to be honest. All I knew was a free trip to Vegas, and I was like, yeah, I should probably go to Vegas. But this is what happened when I went to the event. Okay, this thing was crazy. And then we'll get back into the market. This is what happened when I went. And I didn't know this was going to happen, but this is what happened. All right.
This is a Palantir. Okay, so I'm at the Weejo event right now. This is a Palantir SPAC investment. They're showing off their data for good driven AV operating system. And we're doing some stuff. And apparently, I'm driving a red Lamborghini today. Me. I'll be with a professional sitting in the car, but I get to drive the red Lambo. I've only driven a Honda Civic ever in my life, so this is going to be fun. Okay, so I'm at the Weejo event right now.
It was crazy. I got to drive a Lambo. So you know that joke, when Lambo? I guess it happened pretty quickly for me. I got to drive a sick red Lambo. I've never sat in a Lambo in my life. I've never even touched the Lambo, and I got to drive it. So, and then they showed me like the data analysis from, did you get to see how they use Foundry? Not Foundry in particular, but they showed me like the platform that shows what happens with the data when they get it from my drive. So they showed me like how I was driving, how the data can be interpreted, all that stuff. So it was a really, really cool experience. Do I recommend buying the stock? Not financial advice, but personally, no, their financials do not look amazing to me. I also think if you're going to want exposure to Wejo, just buy Palantir and that gets you exposure. Love the company. You know, it's hard not to think the potential is just insane. They process like 5 billion points of data every day. They have 95% of the United States covered, and they have better map accuracy than Google freaking Maps. I mean, you talk about a tech company that's like building some freaking amazing tech. And that makes me feel like the stock is undervalued, but I also think I need to understand more about the financials. I'm not going to just do it because, you know, the tech is cool, because at the end of the day, still a business. And, you know, Ginkgo, for all I talk about the tech, the financials are really decent. I mean, it's not horrible at all. So, I mean, it's a little bit of a frothy valuation, but because it's gone down so much, I still think there's an easy double or triple there over the next 5 years, and maybe even much sooner than that if we just have a macro run. So we're going to see. We are going to see. We'll see how this all ends up playing out. How fast did you go? So I got up to 80 miles per hour, and you guys are going to think that's probably not amazing. But like the guy says you could go fast, and then when he says brake, they were like, if he says brake, you have to hit brake. And the fastest I got to was 80. I wanted to get to 100, but then he would be like brake, and I can't like deny the freaking professional, so then I would hit the brake. But we'll see from there. Do you recommend buying a Lambo? No, I would never buy a Lambo. I will drive my Honda Civic forever. Hey, Amit, what was Ginkgo's SBC last quarter? Chris, you got to understand that their SBC is maybe a lot, but it's also counted for the last 15 years or 8 years that they've been in operation, because when they went public, there's a little bit of loophole that they had to count all of it. Regardless, excessive stock-based comp is something I am actually happy that a growth company has, because that means that they're acquiring the best talent and they are building on their growth. That is the Palantir argument. So I'm not worried about SBC. Also, I'm not worried about SBC at this valuation. If you're worried about SBC at a $20 billion valuation, sure. At a $5 billion valuation for the potential that they have, I'm not worried about things like SBC. I can overlook that. And quite frankly, I do not think that's a harm on the stock. But again, Chris, if you think they're a Theranos, you're never gonna be objective about this at this point. So I can't change your mind here. Let's talk about the Bank of England and get some analysis here, because I have not learned much about them. So let's see what they have to say.
Jason, you were very quick to condemn what the Bank of England was doing, or maybe what the Bank of England was doing in response to some policy blunders by the UK. You want to explain?
Yeah, look, I think the Bank of England had to do what it did yesterday, but it was put in a terrible position by fiscal policymakers. They were the ones who drove the run on gilts. They were the ones who drove the yields up. And the Bank of England compounded the problem when they did the tepid increase last week. They didn't do anything beyond a statement on Monday. And so I don't think yesterday was intended as relaxing their fight on inflation, but it's really a very confusing message coming out of the UK as a whole.
What do you think the end result is? I mean, we watched, before the Bank of England's move, we've been watching gilts, the yields soaring. We've been watching the pound get crushed. Now what? Is this a temporary fix from the Bank of England, or are they going to have to double or triple down to convince investors that they're really there backing this up?
Look, the theory is that, the hedge funds will rush in. They'll start buying these gilts to front run the Bank of England, and the Bank of England won't need to use those 65 billion pounds. That might be right. But what happens when this period expires? They can't afford the perception that they're engaged in yield curve control. Interest rates in England should go higher based on the fiscal plan that happened last week. They will go higher. And the longer you try to put your finger in the dam of those interest rates, the more you're creating something pent up and possibly some bigger adjustment in the future. I think their hope is that they're slowing the adjustment, that they're making it happen in an orderly way. But if they try to stop it, I don't think that's going to work.
it reminds me, Jason, of the largesse of some of these European countries and trying to soften the blow. But if I were a citizen of the, like the energy subsidies, we're not going to, you're not going to have to pay more. We're going to cover that. No one in the right mind would buy gilts here. I don't know why a hedge fund would buy any gilts. Like you said, rates are probably headed up. So I don't want my government making a bad trade. They're making a bad trade just because it's so hard to get out of the Roach Hotel that central bankers have made.
Yeah, I mean, that's the paradox. At a time of inflation, you really want to help people. If you help people by giving them money, you drive up interest rates. There's going to be a lot of people in the UK paying more on their mortgages, even as they pay less on their electricity bill. And none of this is, working out particularly well. Europe is doing less in terms of the largesse than the UK. I hope they look at the UK, see it as a warning. Look, I think you can do some targeted relief for some people, but you have to make it very targeted. You can't make it huge.
You weren't a central banker and you weren't in the Fed. You don't have to defend the Fed. Do you agree with the journal or central bankers, do you agree with the journal? They call it the Banker and Bailey circus of monetary policy.
Look, I think the biggest problem there is number 10. Number 10 is the people that said they'd take away the Bank of England's independence. Now they've temporarily put that on hold, hopefully permanently put that on hold. They're the ones that announced this reckless fiscal plan. I think the Bank of England is, they're a little bit behind the curve. I think they've made a few mistakes, but broadly speaking, they're operating in a tough environment.
And Lindsay,
I think one of the points he made there was interesting to think about, which is that during a time of inflation, you want to help people, right? The problem is if you try to stimulate the economy or do something to help people, it ends up hurting during some bad economic times. So the question becomes, how do you deal with this? Open Door, by the way, down 10%. Oh my gosh. Down 9.85. Okay, hold on. Let me charge my laptop. If Open Door is down almost 10%, then that means during that little 3-minute video we watched explaining why quantitative easing for the UK shouldn't be happening, there might be some other stocks that are down as bad as that. Okay, let's put this charger in. All right. Can you guys believe we're living through these times, bro? We are really living for these times. You guys are talking so much about Rocket Labs, bro, in the chat. I know nothing about this company. You guys are so what is their valuation? RKLB. Rocket Lab. 1.97 billion market cap. Price to sales is 14. Price to book is 2.7. Interesting. Okay, I will look into it. I know you guys are saying it because you also love Elon and SpaceX, and maybe this is kind of like a little mini SpaceX. I will look into it. I know nothing about it. Literally, I know nothing. Palantir 788, right back to where it was in the morning. Apple 143 getting schmacked. Apple's getting shellacked. Ginkgo actually holding up not that bad today. It's down 6%, but I mean, it's holding up okay. Open Door down 10%. SoFi down 5%. SoFi is 2 cents away from under 5. At 4, I will be buying it if it hits 4s. I'll be buying a little bit. Meta 2.53%. It's so crazy, bro, because I'm like, okay, I want to buy it at 4, but then I'm like, if this whole freaking market crashes, it's going to like $2, right? If the S&P is at 3,000, like every stock is going to be a hit. But then you ask yourself, okay, can Palantir really go down lower? And it's like, yes, but it's like, would it? And if the S&P goes down, it has to. Like, it's going to be very hard for it to operate in the inverse way. Kind of like same argument about Bitcoin, unless they get some amazing contract or something. But even in that, it's going to be hard to be able to replicate it. So obviously you got a DCA and stuff, but like, goodness, it's just wild. Who is Gabe anyway? Does he work on you with audio? No, Gabe's just a friend that I met through Discord, and he likes talking about stocks. That's it. He's probably going to invest in audio, but that's it. DRK, what's up? Good morning. Good morning to you. Literally for months now, I've been telling people about Open. Yeah, something's going to happen with Open. By the way, you guys saw Meet Kevin. He raised like 21 million for his Open Door competitor. It's a lot of money, man, in this economy to raise 20. I mean, I raised 300K for my startup, and I thought that was a lot because it is a lot. I don't have Meet Kevin's following, obviously. So for me, it was insane, especially in this economy. And I was doing it in June when everything was just pure shit. But Kevin raising 21 million, man, it shows you that if I was a rich person, I would not want to put my money in the market. I would want to give my money to someone like Kevin if I had a decent enough belief that he could 10x my money better than any of these discounted stocks in the market, because you just don't know where the market's going to go. Whereas a private company, you know someone's working, especially if it's in real estate. I mean, if he buys these houses when they crash, he's going to make a lot of money. So it's going to be an interesting way that he does all this. 363 on the S&P. What's VTI? Where's VTI? VTI is down 2%, 182. What's the old time on VTI? Old time on VTI is 241. Oh, look at this. It was 23 in 2010, 241. So over 10 years, it performed decently. I mean, pretty damn good. That's what's the VTI. All right, let's see what you guys are talking about in the comments. When is your interview with Jeremy dropping? Probably like next Tuesday. Probably next Tuesday, around that time. U.S. recession could set in by the end of the year. Let's take a look at this one. Let's see what this is saying.
We'll start with you on this. Just this question that was raised yesterday that Stan Druckenmiller brought up, the issue of a hard landing. He's looking at that as a much more likely scenario, says that is his base case at this point. How about you?
Well, I think it was pretty interesting that he was waiting until 2023 for that hard landing to occur. When we look at nearly every sector of the economy, say for the labor market, it does seem that we can check that recessionary box. And so I do see those recessionary conditions potentially setting in by the end of this year, with the NBER as a look back, declaring that technical recession beginning potentially as early as the second quarter of this year. And so I do think, again, the Fed raising rates at this aggressive pathway and looking to their forecast of still being able to maintain positive growth, a very minimal uptick in the unemployment rate, seems at odds with the reality of the potentially very significantly negative implications that a further backup in borrowing costs, be that 100 basis points, 125 basis points, will have on the domestic economy.
Although, Lindsay, I don't think that Stan Druckenmiller was of the opinion that they need to stop at this point. I think his point was they needed to start a lot earlier. The Fed's looking at this, not saying, hey, we're raising rates because the economy's great. They're raising rates because inflation is raging.
Oh, absolutely.
They need to get that under control. So what's the Fed to do at this point?
Yeah, they certainly were behind the curve. And while arguably they shouldn't have accelerated the pathway of rate increases by the end of 2021, they did need to remove their foot off of that crisis level of policy. But remember, they were still talking about transitory near the end of last year. And so it took the Fed quite a while to grapple with the fact that inflation was becoming more broad-based. So at this point, I agree, the Fed has very little option other than to continue to raise rates. But as we approach the 4% level, that is likely enough to curtail the demand side of inflation. And the Fed needs to recognize that that's a good holding point, because a further backup in borrowing costs at that point does little to address the supply side, but will all but ensure recessionary conditions.
When you say that you see a recession happening right now, maybe even as early as the second quarter, how deep of a recession are you talking? I realize that depends on what the Fed does from here, but what's your base case scenario at this point?
Base case scenario is a drop of 2% growth as we look to the second half of 2022. So looking at that in a broader perspective. As we roll into 2023, assuming the Fed does recognize the limitation of monetary policy on the supply side of inflation, and they're willing to hold steady at 4.5%, I think by the second half of 2023, we do start to talk about a return to positive growth. So at this point, our base case is a relatively brief and shallow recession. But again, depending on how aggressive the Fed becomes, that could quickly change to a more prolonged or deeper downturn.
Sam, let's just talk about the markets and the volatility and the downward pressure we've seen this month. September has not been kind to equity investors.
Oh, and you're absolutely right, Becky. Interesting, but typically in September, we have about 20 days in which the market trades by 1% up or down. This time around, it was 56 times, so more than 2.5 times the volatility. And history says it's probably going to get worse in October, which traditionally has 36% more volatility than the average for the other 11 months of the year. So I don't think that we're done yet. And as a result, a lot of volatility likely to come.
The other thing that Stan Druckenmiller said yesterday that I think had everyone in the room kind of sitting on the edge of their seats was this idea that you could be invested in the indexes, and 10 years from now, you may not have made any money from where you are right now if you just let it ride.
Well, that would imply that we do have a Great Depression kind of a follow through. I mean, from September of 1929 through the fall of 1954, we ended up really just getting back to break even. And I don't think that we're going to have to experience anything like that. But I do think that we should be telling ourselves that we're not going to get the kind of returns we have in the past. On a rolling 10-year basis, the S&P posted compound annual growth rate of about 14% before this bear market got underway. And if you look to what is normally the case over the last 100 years, we should be closer to 7%. So certainly the 10-year trajectory is likely to be coming down, but I wouldn't necessarily say that we're going to see a 70s environment all over again, which only saw a 1.5%.
All right, that guy's audio is kind of trash, but when he says U.S. recession could set in by the end of the year, there is some breaking news that I don't know if everyone saw today, but we are in a technical recession. The GDP quarters or GDP reports for today came out negative growth, 2 quarters in a row. 4 quarters in a row is a depression, 2 quarters in a row, technical depression. 2 quarters in a row is a recession. So we are in a technical recession today. Literally today. If you Google GDP recession, you will see an article that says we are in a technical recession. So everyone's saying we're in a recession. Like, we're here. S&P, by the way, 362. What is the all-time low on the S&P? 360.69. 361. We got to beat 360.69, of course, .69, of course, to get a lower low. To get a lower low. And to be honest, I think we might as well do it. Let's get the job done. Wow, where's Ginkgo? Ginkgo must be crashing now if the whole market. Ginkgo's doing all right. 323. It's doing okay. It's doing all right. Snowflake 167. Yeah, man, this is a rough market. This is a Twitter. What's going on with Twitter, bro? Like, is Elon testifying or not? Does anyone? I haven't kept up with over the past couple of days, but I think he's like, I'm not sitting down to testify. And for some ungodly reason, the stock market has valued Twitter at $42. We know it's not worth more than 15, maybe. Even though, again, I love Twitter. Twitter is my favorite platform. I love the platform. But the company itself, from a monetization perspective, probably isn't that good. So I guess, we got to see. By the way, 180 people here. Thank you so much for being here. I also have a startup that is trying to be in the social media world. If everyone could please sign up. If you're not signed up, it's in the description. It would mean the world to me. Just go through some of the content, see how it feels like. I'm reporting my results for my startup. You know how investors have like quarterly updates? I have monthly updates for my investors of my startup, and I'll be releasing those October 1st, this Saturday. So check it out. Let me know what you guys think. It's been growing decently over the past month. Some exciting stuff's going on that platform. Maybe one day we can beat Twitter in market cap. That would be pretty cool. But yeah, we'll see what happens. Okay. Anyway, Alibaba. Wow. 77. Last time I saw this guy, it was at 90. I guess I did not see it for a couple of weeks now. Goodness. Target, Walmart, 132. Yeah, there's nothing else that's excited. S&P's flirting with beating that low. It is absolutely flirting with getting there. And I guess we are going to see if it goes. Might as well rip the Band-Aid off. I don't understand why everyone is acting like we aren't already in recession. Well, the government did kind of change the argument around a recession in a certain way. So Porsche IPO is going to be a $72 billion valuation. I hope no one's buying the Porsche IPO, because unless you love cars, I don't think Porsche in this economy is worth $72 billion. No matter how good their margins are on cars. I don't know. We will see. Let's look at this one. Coinbase is not a good business model. I've been thinking this for a while and seeing what it looks like. So let's take a look at this one.
It was in August. Thanks for having me. And the market was in the midst of the summer rally, and it's given that back. And we keep seeing sort of this whipsaw between 3,600 and higher. And so market's trying to figure it out. Again, our hedged accounts were probably neutral, plus or minus. We're pretty much fully hedged, as we have been all year. But rates are higher. And one of the things we'll talk about today, not specifically, but broadly, is that there's just a lot of business models that, we're struggling at 2 and 3% that really don't work at 5 and 6%. And that's where I would tell people to watch their risk.
That's a principal thing I wanted to ask you, that the higher rates go increases your appetite for shorts?
Certain shorts. I mean, so again, business models that were dependent on easy credit and low cost credit, commercial real estate, a variety of different things. Carson Block was talking about some of the solar stocks. I mean, some of these businesses just don't work at 5 and 6 and 7% corporate rates. And there are a lot of them because the corporate world got used to that for 13 years. As for the run-of-the-mill industrial or whatever, I think, that'll depend on the economy. But where we can find business models that basically are broken at mid to high single-digit interest rates, I would tell your viewers to be cautious.
You have mentioned specific names with us in the past. I'll ask you about a few of them. You say what you can say. Coinbase, still short?
We're still short. I mean, Coinbase to us is really symptomatic of the sort of broader, what I call predatory junkyard that is crypto. And so one of the things we pointed out to people is that Coinbase is losing money at a prodigious rate right now. It's charging consumers really excessive commissions, we think, retail consumers, about 2.5 to 2.6% round trip, and every time you trade. So you do 4 trades a year, that's 10%. That's a big hit. But what's really interesting to us is that Coinbase has about 10% of the crypto universe under its umbrella. And its overhead is running about $1.5 billion a quarter. So that's $6 billion annually with 10% of the crypto universe. So if you kind of do the math, and if they're representative of sort of the broad crypto infrastructure, that means that the crypto universe is probably running expenses of $50 to $60 billion a year on a 1 trillion notional. And you guys know what that means. That's really, really high. And so we worry about, we don't know where crypto's going, we don't know where Bitcoin's going, we have no idea. But this is a really high cost industry that needs lots of activity and really high commission rates to make money. And I think.
Yo, did this Chanos guy short Tesla? Jim Chanos. I never heard of this guy before. Jim Chanos short Tesla. Oh, he did short Tesla. Wow. So the Tesla OGs know this guy really well. Interesting. So, I mean, Coinbase, he's obviously bearish against crypto. So that makes sense for why he's against Tesla or against Coinbase. Tesla's most prolific short seller, Jim Chanos, claims Tesla investors are overlooking a big risk. June 17th. What did he say? He said in 2017, the company's worth zero. We think equity is worthless. Well, he's wrong since then. He still, however, considers Tesla only a car company. Chanos first part stated that Tesla is still trading at an expensive valuation of 10x revenues, 30x gross profits. Tesla's valuation, according to the short seller, can only be justified. By the way, I talked to Jeremy yesterday and I asked if Tesla was overvalued. He said short term, yes. Long term, no way. And I think he's only saying short term, yes, because of the macro stuff. So he is still very bullish on Tesla. Wow, this Chanos dude does not like Tesla. Interesting. He's always been short Tesla. Oh boy. All right, let's go back to the markets. We've got to look at what's going on in the stock market, and we have got 361 on the S&P. Did we hit a new low? No, we still got 360. We got to hit a new low. Tesla is 273. Oh my, down 5%. Palantir down 1%. Apple down 5. Man, when you take Apple down 4.5, it's a rough day. It's a bloody day. Apple getting hit with 5 is tough. SoFi, here we go. 494. Should we buy? Should we buy some SoFi here? Oh man, I want to wait a little bit more. Let's see. I have a 640 average on SoFi. I think I have like 300 shares or something. Where am I at? Yeah, I'm only down like $300. So not too bad. Let's see if we can keep buying. Let's see. I'm not buying any yet, but we'll see. Okay. What else do we have? Anything else? Anything else? Anything else? Anything else? No. Let's go to Bloomberg because I have the subscription to Bloomberg. So any article I click on will not be paywalled. First of all, who's in Florida? And I hope anyone in Florida, you have my well wishes that everything's okay. I hope you're doing all right. It's been a disastrous Hurricane Ian so far. It's just sad, man. Florida gets it every other year or something. So I hope everyone in Florida is doing okay. Any breaking news? Anything crazy? Oh, yes, this Nord Stream gas thing is insane. It's going to be a crazy winter for Europe. And I don't know if this is going to help the economy. I don't know how this is going to hurt the economy, but I don't think it's going to help it. Not being able to access gas pipelines in the Baltic Sea as per Russia. I mean, if you think there's a world in which a truce could happen, in which it's like, all right, we agree for the war to end in a peaceful way and for things to get back to normal. But there's also a world in which Putin is like, no, screw that. The incident has been prompted increased security on energy infrastructure across Europe. Norway is now Europe's biggest gas exporter and it's the largest energy companies on Wednesday. Nord Stream gas leaks may be a new disaster for the climate. The pipelines were already out of action, but any hope that the Kremlin might have turned the tap back on at some point have now been dashed. Police in Denmark and Sweden are investigating. For now, it'll look like those efforts will be enough to get Europe through the winter, though questions remain over the following one. So they're saying this winter it'll be okay. The next one's not the best. And if the war with Ukraine is going on in 2023, it'll be really sad for humanity in general. Not the best. Thanks. Fine in here in Miami. Lucked out. Oh yeah, Miami's not getting any of it, right, Tommy? Hope you're doing okay. DRK, I'm gonna go on late night stock talks and learn amid some Rocket Lab research. Yes, probably not tonight though, Joel. I got to see because I have like 5 meetings back to back, but we'll do it soon. Bank of America's guidance is kind of good. 3,600 zip a bit, 3,200 take a bite, 3,000 all in. I just wish it would happen quicker, bro. And I know we can't have that. Like, I kind of just want it to be done, you know? But it's not going to happen. XBT down 0.62, low-key depressed. Guys, to be honest, I mean, all of us as investors long-term should be really happy at these prices. Like, there's no reason if the S&P was 430 right now, I would sell pretty much everything. I would not believe in anything if the S&P was that high right now. Like, I could handle it 2 weeks ago, but it would be ridiculous for the S&P with everything going on, or the market in general, right? So I think this is actually really healthy. Like, Tesla 270 is super healthy. We knew Tesla 315 was stupid. Like, we knew it didn't make any sense given this macro. Like, no matter how much of a fan you were of Tesla, there's just no way that made sense. So these prices at the end of the day are good for long-term investors. I think what I'm struggling with is how low is it going to go, and do we make the June 30th mistake of missing the bottom? And the easy way to resolve that is to DCA. But sometimes you think maybe that bottom was a bear market rally and the real bottom is coming. Now, again, I know we can keep playing these hypothetical games, but I mean, this is the stuff you think about. Tesla at 270 makes no sense. I disagree, Josh. I think long-term on the fundamentals of Tesla, I agree. It doesn't make sense. The macro determines more than the fundamentals of the company. If Palantir shouldn't be at $7, like, but the macro says we don't care about a Palantir company right now. Like, I think we have to be objective enough to realize if the S&P is down 20% on the year, Tesla cannot be up to $1 trillion market cap. You know, like, it's just it's not logical. It's so inverted at that point that we're just begging for more trouble and for a worse crash. So I personally don't think that makes a lot of sense. If Putin uses any nukes, gold and silver will take off. Well, if Putin uses any nukes, a lot of other things are going to take off. That's not going to be the best. Tesla at 220 would be amazing. I agree. That would be really nice. I don't know if we get that low, but we are going to see. Let's see what else we got. Let's see. All right, here we go. Let's talk about some Apple. Apple's health is dependent on the result of the consumer, which means if the consumer doesn't want to buy any more phones or laptops, let's see if Apple survives.
To see you. My outlook for this cycle was lower units, higher margins, and really the questions of A, does Apple have the components to fulfill demand on the premium end? If so, that'd be great. And B, are they going to get the benefit of a good comp on attach for watches and AirPods, given that stores are open this year? Has the question really changed around those things?
Morning, John. No, I think that frames it pretty well. More broadly, I think the question is, will a consumer that is increasingly pressured by high interest rates and perhaps some difficult comparisons from a year and 2 years ago when they were home and spending on consumer electronics, will Apple be able to continue to engage and command dollars from this consumer? That's the real question, and it extends not just to iPhone, but also more broadly to Macs and iPads, which have had, a really good years during the pandemic and over the last year, and as well the watch, which is arguably the most discretionary item that Apple sells. But it all goes back to, how healthy is the consumer, and ultimately is Apple's product positioning, targeting a somewhat more affluent consumer, able to continue to persist healthily going forward.
But the risk, it seems to me, is that Apple's stock is still actually up more than 3% over the last 12 months, which is pretty unusual. What will it take for Apple to go more in line with what some other very strong companies like Microsoft have done performance-wise? And is that just in the cards, even if the season is okay?
I think Apple, has commanded a view in investors' minds that it's a durable consumer franchise and that earnings will not be impacted as much as other companies. So if we do see incremental weakness in iPhones or more broadly across its consumer offerings, I do think we'll see a pullback in the stock, because right now investors have given Apple the benefit of the doubt and said, look, results have continued to be very strong. This is a great franchise. Consumers like their products. And we think that they can hold up through a more difficult economic period. If Apple is not able to deliver on that, and that's why you're seeing some uneasiness in the stock today. We have a downward revision, albeit from just a week or two ago, in terms of production expectation. So if the fear is, this might be catching up with Apple, and therefore maybe earnings and revenues are not as secure as we thought, sure, we're going to have the stock get back some, unquestionably.
So, I mean, the Apple argument makes a lot of sense. He's not wrong on that. I think that's what we've all been trying to understand about Apple. S&P 500 just hit its new lows, 360.59. The 52-week low was 360.69. So we hit the new low for a little bit, and then we're back up to 361. Bitcoin at 18,896. So new lows on the S&P. We did not fall under 360. Under 360 would be interesting, because psychologically now we're in the 350 range. We normalize 350, we get to the 340 range. Boom, the first target of that, like Bank of America, JP Morgan, all of them set at 3,400. It is settled. Now it's a question of, do we hit 3,200 or 3,000, and then does the bounce happen? I don't think we drop below 3,000 personally. I don't think that happens. But it might be a long fall down, and we're going to see. Come on, man. Make me feel special. Shout out to Echoes in the chat. He is. People are going to hold on to their iPhones longer, myself included. Yeah, that's the thing as well. My 12 Pro Max. Look at this. Verizon literally it's so funny. Verizon texted me 2 seconds ago. Hi, it's Verizon. Who starts a text like that? Hi, it's Verizon, bro. But because you paid off 50% or more of your current iPhone, you are eligible to turn it into the iPhone Pro at the retail price with our early upgrade program. I just don't need to do that. Like my 12 Pro Max is phenomenal, and I like wearing it without the case. Like it's such a beautiful piece of hardware. I mean, it's absolutely gorgeous. I've been saying this for months. They've made it so good that it doesn't give me that's why they slow down the battery every software update. Literally, it's been proven they do this shit. I thought I was going crazy, but like, no, they do this shit. And they try to make the freaking price go. They're trying to make you upgrade. And it's like, bro, we don't need to upgrade. You guys did such a good job, which is why Apple might be at a, stale front on its growth curve. I mean, goodness, the company's worth $3 trillion. Either you got to put out a car or a headset or double your advertising revenue, but I don't think investors are going to give you another couple $100 billion of market cap on advertising revenue, which means you've got to sell and move product. And at the end of the day, college season is here and people are buying laptops. Oh, that's great. But the iPhone is, I think 60 billion they did last year off the iPhone. I don't know what percentage that is of sales. That's like at least 30, 40% or something. It's the driver. And if people don't have a reason to upgrade, then, they're not going to buy. It's just that simple. Now, could Apple start going into markets they haven't tapped that are like Android is still most of the world. And if Apple built an iPhone that was priced in enough for Indian consumers, I think a lot of Indians would buy the iPhone. But the problem is they're mainly getting Androids. This is how you will change it, keeping it without a case. Bro, in Vegas, I literally walked around without the case. And it felt cooler walking around without the case. Bro, I have so many things to talk about from Vegas because I do not like Las Vegas. I don't like the vibes I get from it at all. Luke, Gab, yo, Amir, what's up, man? Amir is perfectly fine. Apple owns America and Samsung owns the world. That is 100% correct. I got a 12 Pro Max protected by OtterBox. Yep, you gotta do what you gotta do. You'll need to get a new one eventually. Yes, eventually, but I can still wait another year. You have the iPhone 8, Stevie Stone. Goodness, iPhone 8 is I couldn't imagine the iPhone 8. That's too little. I can't do that. Okay, here we go. The Fed needs to catch up on inflation without surprising markets. Let's see. Actually, hold on. No, let's look at that. We were talking about Apple, right? So let's doing a little bit more analysis on Apple, because I want to talk about this one. Okay, here we go. Let's look at our boy Josh talk about it.
First time that fever is broken. Look at that drop in the 10-year. Look at the drop in the 2-year. All of a sudden, it's one day out of the last 25 days. You don't have to worry about the effect of higher interest rates. And then you look around and say, what do I buy? But now you also have stock-specific news in both directions. Mm-hmm. Apple is notable. According to my team, the S&P's gain would have been one of its best one-day performances in the last couple of months if Apple were just doing what the overall market is doing. But it's actually a detractor. It's such a big stock. It's 7.5% of the S&P. So if Apple were playing along with everyone else, today would have been a much bigger up day. And Netflix, and this is not necessarily a market leader. It's kind of its own story. But that is one of the hardest hit spaces, communications services. That's the worst group of the year. Netflix is one of the biggest market weights in that group. And this is noteworthy that a company could actually have fundamental news to drive the price higher that has absolutely nothing to do with Jay Powell. And I think for people in this market, that's a refreshing development.
You don't often see Apple, for example, go down, a couple of, and now it also closed off of its lowest levels. But you don't see often Apple go down the way it did and the Dow finish up the magnitude that it did. So your point's well taken. But how much of this, and I know people are pointing to this intervention in the UK, how much of it is, we know it's taken pressure off of the system, but how much of it is also like, okay, it took something about to break in a market for a central bank to flinch. It's a precursor of what might happen here. They flinched, we'll flinch.
Well, if and when we flinch, I can't tell you what the effect will be 3 months out, but I can tell you the day of, this would be like a dress rehearsal. So I think you make a very good point. Like, if people are sitting on the sidelines and they're saying, what happens if there's only two or three more rate hikes and that's the end of it? Do I have enough exposure? No one's really been thinking that way until today. So I do think the return of QE absolutely is giving people a reason to think twice.
Right.
And when he means QE, he's talking about quantitative easing from the UK central bank. So people are thinking twice, because if the UK is saving their economy with QE, would the US do it? Now, Powell has been very clear they're not going to take their foot off the gas, but who knows? Who knows?
People are, have been so intent on thinking about QT and the implications negatively so for stocks, some would suggest, of that. I mentioned at the top of the read here, the differing views, if you will, here at Delivering Alpha, or at least somewhat, and they're nuanced, of course. Stan Druckenmiller talks about a hard landing, if not worse, next year. I had a conversation a short time ago with Citadel's Ken Griffin. Wasn't as negative, and maybe wasn't as negative as perhaps I thought he might be. Here's what he said. Let's react on the other side.
It's a very uncertain time. We're grappling with the threat of nuclear war in the Ukraine. We're grappling with unprecedented central bank interventions. We're grappling with record high inflation in the United States in our lifetimes. So we're in a very uncertain time for investors. And fortunately, the U.S. equity market, although down quite a bit for the year, is showing a level of resiliency. And the U.S. economy, most importantly, is still strong for people who are going to work every day.
Certainly did not give you a sky is falling point of view. He did note the strength of the consumer, and maybe that continues in how the stock market's been so resilient.
So, all right. So I would just start by saying, like, if your expectation was you were going to come here today to the beautiful glass house on the west side of Manhattan, and Stan Druckenmiller was going to give you the warm and fuzzies, like, that's like you go to see Dolly Parton and she doesn't do Jolene. It's like, what did I come here for? So that's what you're getting in that session. There's nothing wrong with it. I've been watching it for 10 years. He's one of the greatest of all time. And he's giving you the bear case in as eloquent a way as you're going to get it. What Ken Griffin said that was most interesting to me, and I think has the most ramifications for most people watching this program, is the return of the 60-40 portfolio. Keep in mind, this is an alternatives guy. He's not pitching a 60-40 portfolio. And it's very rare that you'll hear a hedge fund say, no, actually, that's going to work. That's pretty good.
Well, at a time when people are questioning whether it is the right strategy anymore. Not only did he not suggest it was the right strategy, he said this was a great time for it.
I'm so glad he said that. It's something that I think I've been trying to say. I don't say it as well as he says it or as succinctly as he says it. But what would you rather? You have a bag of cash. What investment environment would you rather walk into? 1 year ago today, the 1-year treasury is 7 basis points in yield. Effectively, net of inflation, you're paying the government to hold your money. And stocks are selling 24 times earnings. Now you got a 15.5 forward PE. And on the 40% side of a 60-40 portfolio, you actually are earning a rate of return that could be above CPI. So positive real rate of return on the 40 part. What were wealth managers saying to their clients about the 40 part of a 60-40 for the last 3 years? They would say, well, at least it gives us optionality. At least it's ballast for the portfolio. You would have to wink to talk about the 40 part. Not so anymore. 4% in yields, real rates of return coming back. Looking at taxable equivalent yields in muni bonds, somewhere close to 6%. Looking at corporate paper at 5% plus. We haven't had a situation like this in a very long time, and I was glad that Ken brought that up.
Gunjan, let's focus very quickly on that data that came out 30 minutes ago.
All right. That is an interesting piece of analysis from him on Apple. I'm sorry, guys. These two women just popped up on the screen and it caught my attention. I'm still a guy at the end of this day. Who is this girl? I've never seen this girl. Wall Street's Gunjan Banerjee. Oh man, I'm being such a guy right now. I was like, who are these girls? Anyway, so what he's saying about Apple, I think makes a lot of sense. It's either you believe they're going to be able to innovate and keep it going, or it's going to be fading out. Has it peaked? I don't know. Warren Buffett doesn't think so. He's been buying more of Apple. I think he bought a lot more at 144, 146. So we're going to see ultimately how this plays out. Apple is just one of those things I'm so confused about, because it's one of those things that's a staple. It's like, yeah, you buy it, but at what price and at what valuation do you think it makes a lot of sense? The precedent argument he said about the UK starting quantitative easing and that allowing the United States to feel that maybe we should do it, I think was interesting. I had not heard that one before. I don't think Powell would do it. I think they're so committed to getting inflation under 2% or whatever. But I guess we're going to see how it plays out. Okay. You guys were saying two girls. Oh man, we saw some nice people at Vegas. I'll say that as well. All right, last run on the market, and then we'll be out of here. Open door 3.081. It is 8 cents away from under 2 or from under 3. Nvidia 120. Goodness, what's the 52-week low on this? 120.90. We hit the 52-week low today on Nvidia. Oh my. We thought 130 was a good buy on Nvidia. Shoot. There's other words I could have said right there instead of shoot. Oh boy. Apple 135, Google 96, Adobe 275. Market still hates that. Rumble, I don't know who the hell bought Rumble, but that's down 5%. Ginkgo down 7%. Tesla down 5%. Apple down 5%. 4.49. Palantir down 0.75%. Palantir not getting hit as badly. S&P a little bit above 52-week low at 361. And Roku 56. Roku getting hit. Wow, Roku got hit 8% today. We'll see if Kathy buys some stuff today. She hasn't bought Zoom, Roku, and Teladoc in a while, or Coinbase or anything like that. Maybe she ends up buying today, because today looks like a red day. So we might see some big buys from her. All right, Nvidia pre-COVID was 80, still 50% is amazing. I agree. It's just now, Nvidia is likely, it had its run. So the question is, can they put up the same growth even with reduced guidance to justify the next 50%? We're going to have to see. AMD is what I'm focused on. AMD? Look, guys, I have to be honest. I have not. Wow, AMD at 64. Let me share this for a second. I have not done the due diligence I need to do on AMD. I know their valuation is a bit frothy from what I understand. Maybe I'm wrong on that, but that's at least what I've heard in the grapevine. I need to do more DD on AMD because I don't own AMD or NVIDIA. NVIDIA, the DD I've done is more tech, a little bit of valuation stuff, but more tech. They're supercomputer. They're building a digital twin of planet Earth, which is insane. They just had their conference, so I watched some of those videos, tried to understand them more. AMD, I know the CEO is amazing. I do not know that much about the actual company, but being under 60 when it was at 140, it's looking like things, might not be too bad. All right. Thank you everybody so much for joining. Nate, you joined right at the very end, had about an hour, 11 minutes today. So thank you guys for being here with me. I don't think we're doing late night talks tonight because I have to catch up on a crap ton of meetings that I missed because I was at Vegas. But I do have a lot of stories from Vegas that I will be able to share. Last look, Tesla 271 and SPY 360.59. Okay. The reason I have some stories from Vegas is because I have some things I need to talk about what happened. It's an interesting city. So tomorrow night, Palantir Weekly, a lot of stuff to talk about Palantir. I think Sachin will be back. We'll see. Maybe he won't. Maybe he will be. Catch up on sleep first. Bro, literally, I cannot sleep. I just wrote on my notes on my phone, like 17 different things to do. I did sleep on the red eye here, so I feel more refreshed. Tristan, my videographer, did not sleep, so he's completely knocked out right now. I was sitting next to a boy and his mom, and our seats wouldn't go back. For some reason, it was stuck. So you have to lay back a little bit so you could kind of be in a relaxed position in basic economy because I'm poor. The seat didn't even move back. So I don't know how I slept, but I slept somehow. And I woke up and I was like, oh, I'm back here. So I'll sleep a little bit later tonight, but I got a lot of stuff to get done. All right, everybody. Thank you so much for joining. I appreciate it. I will see you in a couple of videos a little bit later today. I'm about to record a couple new videos on this new Palantir news and put that out. And yeah, we'll see you guys tomorrow, late night or morning open, ending out the week on Friday. Bye-bye, everybody.